Hey guys, happy Sunday. Thanks for stopping by for another episode here at All I See is W, where we talk about stocks, crypto, and finance. In today's video, I'd like to share with you one hot stock you don't want to miss out on. In fact, there's so much volume with shares being traded. That is Opendoor's ticker Open. What is driving the price up? I mean, last week we're seeing significant bullish activities going on with Open. I'll go through the latest updates on Open Doors, sharing with you the latest news around the company, what's the upside here, as well as going through deep dive technical analysis, what I anticipate as we head into next week and through the rest of 2025. Now, if you're new to this channel and you enjoy this type of content, go ahead and smash the like, subscribe, and turn on the bell notification for more related content. Let's get started, guys. Eric Jackson poses day four. Drake heads to Copenhagen tomorrow. Jay Powell dropped bars at Jackson Hole yesterday. Open ripped 40% on Friday. We had this ticker. This puppy ran significantly. Retail still running this. Open Army Global from 6 to Europe to 82 to $200. I'm the type to say a prayer, then go get what I just prayed for. So Eric Jackson, with his whiteboard, day four to 40% buy Open. Now, most of you will wonder how high can Open really go as we zoom out. I think there's big time potential here, especially with the backing of retail. Sun poses Open triple blue diamonds. Open Door enters uncharted territory. We'll be updating this a lot more. So key thing is anytime when you have a blue diamond, that is signaling bullish activity when, price is, in a bullish type of run up. You can think of it as bullish divergence, relative strength is increasing, OBV volume is increasing, but this is looking very bullish. I think Open has the potential to make significant bullish runs as we head into the rest of 2025. Jake posts Open double top breakout on Friday. Target is now the gap fill from 2022 at $6.67. So back in 2022, we had, resistance at around that, high $6 range. Question is, are we going to have Open break through that $6 range? It's only a matter of time. Once we see that will come. I think the bulls are in charge right now. Amit posts Open traded 640 million shares today at 2.5 million options contracts. Number one most traded stock and number three most traded stock within options market. I imagine a chunk of that volume is happening on Robinhood. So definitely very bullish. We're seeing Open, gain so much, trading volume activity, and this is gonna, drive price potential even higher. Playbook Trades posts earlier this week. I talked about how the 4 hour structure was nice going into Jackson Hole event, and we went on from $3 to $5.20 for a nice 73% move. The interesting thing about this now is the first time since 2021 that price has breached over 200 EMA and closed above it. That to me is a super bullish technical setup. Would be super interested to see how this play is out next week, provided nothing bad happens. Room to $6.40 next, then double digits if structure holds. So, when you zoom out, you see, we open still far behind from its prior, performance. So definitely there's room for it to continue to catapult from this level. So open is starting to get real interesting as investors are closely monitoring Opendoor. Let's take a look at, Opendoor. What are they doing? So they are an online software. You can think of Opendoor as like, the Carvana, but in real estate. So let's say if you're trying to buy a home or sell a home, get connected to a realtor, or even with just doing it without one, you can do all of this through Opendoor. Just the ease and simple use of this software. I mean, it just tells you all of the different housing opportunities, similar to Zillow, Redfin, but this is really like the future. I mean, just with, you know, online home retail sales. So I think this is going to be very bullish as people begin to get more and more exposure to Opendoor. We've seen how Carvana has improved, and I will be playing a video clip of Eric Jackson just talking more about Opendoor. Let's pivot over to technical analysis of Opendoor. So, we saw price back in July, 77 cents, ran all the way up to $5, took a pullback. We're seeing a cup and handle formation. Obviously, relative strength had to cool off from, the 95 overbought territory. Then it cooled off to 50, and now, RSI at 74. Key thing to keep in mind is OBV volume is increasing at levels we have not seen, in recent time points. This is a good thing, seeing the volume increase. Couple that with relative strength. That is why we're seeing, price, go up. Like Friday, we had it go up, 40%, even though during the beginning of last week, it took a slight pullback from $4 down to like $3.20. Question is, are we going to see a pullback, starting next week? That's really hard to tell. One thing to keep in mind is the technicals right now. It's currently at 75, definitely in the overbought situation. There is reason for that. You look at the OBV volume is increasing heavily. So as we look into next week onward, we may very well see price, push up beyond $6. However, one thing to keep in mind is there may be some slight pullbacks, some swings. So it really depends on where you get into Opendoor. I definitely do think that it can go either way, whether that's Monday, Tuesday, Wednesday. Definitely, I don't think it's just going to go one straight shot, like, one linear fashion in green. But as we scale out towards like end of Friday, end of the following week, into September, I definitely do think that Open has upside to break through $6. And next up, it's going to want to get, beyond that $9. So I have that step one at like $10 range. But as we scale out even further, I really do see that, as we head into like the late phase of Q3, $15 is really not too far away, especially with all the volume that we're seeing with Opendoor right now. And, as we scale out even further, 3 to 5 years from now, we've seen how companies like, Carvana, Celsius has grown over the years. I definitely do see Open, potentially getting into like that $80, even $200 in the long-term course if you are a long-term investor. So definitely huge upside. The branding is there, and a lot of people are buying into this company right now. On the near term, we may see some fluctuations, on the dips, and that's typical, especially with it running up 40%. But I do think that, it's just going to continue to trend up from here on out.
On today's show, we are talking to Eric Jackson, the founder of EMJ Capital and a big fan of Opendoor. Thanks for being on the show today, Eric.
Great to be with you, Zane.
Well, we got to talk about Opendoor. Obviously, it's making a lot of buzz recently over the past few weeks. I think you're a big reason for that. Your viral tweet back in July talked about how Opendoor has a potential to be 100 bagger. So, and that kind of put Opendoor on the map for a lot of investors, especially retail investors.
Yeah.
So for the listeners, can you talk through your bull case for Opendoor and where you see the future of the company?
Sure. Well, it's changed. When I initially tweeted on July 14th about it, I was thinking of it as a comp to Carvana. And so Carvana, most people know now, like it's online, e-commerce way of transacting with, for a used car. And most of us have seen the big vending machines, on the interstate. For Carvana, or they bring it to your house and kind of on a flatbed and drop it in front of your house. They were like a go growth stock from like 2017 until like 2021, growing like crazy. Went to $400 a share from like an initial IPO price of like $10 or $15, something like that. And then they went down from 400 to $3.50 in December 2022, and now have come all the way back to $400. And so obviously, like they were plagued by a lot of debt. There were some questions about how they could survive the rapid hike in interest rates, and people obviously a lot of people didn't think they'd make it, but they did, and they had a great management team. They sort of bet on themselves. They kept grinding away. They changed from like a growth at all cost mentality to profitability focus, and it turned out that their value proposition was resonating, and they're in a big fragmented market where they're disrupting the traditional car dealerships, and they're scratching away and kind of getting more and more market share, kind of almost like same playbook as Tesla. Tesla is now up to like 10% market share nationally. So Opendoor is sort of trying to do the same thing, except being an online platform for real estate, buying and selling your house as opposed to your cars. So it's a bigger ticket item, obviously, but when it works, it's the same kind of value proposition, sort of quick and easy, disrupts the traditional agents. Why am I paying this agent, 35 grand to sell my house when they, basically, got a lead off of Zillow or something for it. And they have had to kind of raise a lot of debt. There were questions, the IPO through a SPAC in 2021, I think it was, and, had a similar kind of downfall, like Carvana going from $39 as an all-time high to as late as just June 25th, they were at 51 cents. And yet, when I looked at them, back, in June, July, to me, it seemed like they were just at the point where they were starting to make the turn, similar to kind of what I saw in Carvana. And Carvana, I'd followed, a lot on the way up and down and then up again. And I did get into them, Carvana, at $15 a share, not $3.50, and kind of rode that up quite a ways, and made a big deal about it. I was on CNBC, in June 2023 when they were like $24, and I was sort of like banging the drum saying, this is a great company. Our AI model spotted it. You might want to like pay attention to this. And I was kind of, got a lot of skepticism from the host when I was interviewed about it. Afterwards, like the producer said, we don't want you to talk about names like Carvana on CNBC anymore. People only care about the Mag 7. They only want to hear about Tesla and NVIDIA. We don't want these like little names that nobody's ever heard of and pay attention to. And there certainly it wasn't a meme stock. And nobody was looking for the next Carvana like they are now, because nobody thought a Carvana was possible to go from 400 to 3 to back to 400. So Opendoor, anyway, like is sort of the opportunity to get it right from the bottom to the top. Or at least that's what I initially saw on July 14th. And I simply looked out and saw that in 3 years from now, in 2028, if you looked at what they should be doing from a top line revenue perspective, and then you sort of looked at like what does Carvana get from a multiple perspective? It looked like at $82 a share was more reasonable, not the 51 cents or the 80 cents when I was looking at it. And that's sort of how I constructed my original argument, put it out there, and it seemed to resonate. And, it started snowballing since. Now, I've since learned more about the company. I have sort of like updated thoughts, but that's initially how it happened.
So there you have it. I hope you enjoyed this episode. I'd love to hear your comments, how high you think Opendoor can go as we look at the rest of 2025 in 3 years from now. Can it go to $82? Can it go to $200? Can it go even more? Put it down in the comments, and I really appreciate your time. Thanks for watching.